With massive layoffs in nearly every sector, weakness in manufacturing, car sales and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good, which might explain why so many billionaires are loading up on gold, including hedge fund manager John Paulson and real estate mogul Sam Zell. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome to a very special edition of Stansberry Research with a roundtable today, Danger, Opportunity, and Volatility in 2023. Joining me are Dan Ferris, host of Stansberry Investor Hour, and Matt McCall, host of Making Money with Matt McCall. Gentlemen, so nice to be with you first and foremost. Can I still say Happy New Year? I know there was a cutoff, but
why not? Say whatever you want.
Look, this is going to be a great discussion with both of you. We're going to cover a lot of topics and hopefully give the folks at home some really good, tangible, tips and lessons and tactics they can take away with them today. But first, to cover our first topic of discussion, I've brought you guys some gifts. Because that's just how generous I am. Some luxurious gifts. And Dan, you want to take the pink box?
Okay. I knew that was for Dan.
Let's see, Matt, what I got for you. I got you some gold bars. You could just take off that ribbon because, like I said, they're very luxurious. You could just slide off the ribbon, actually, Matt.
Okay.
There you go.
This now. Okay, so, bacon.
Do you know where we're going with this?
I know where we're going, and I'm going to guess that there are also
eggs.
Some eggs. There you go. I told you, luxurious gifts, the finest, organic, cage-free.
Milk.
Yep.
I'm lactose intolerant, but thanks. Just what I
there
wanted.
You go.
Thank you.
Obviously, point being, we're going to talk inflation.
Yes.
The egg shortage that everyone's experiencing. Year to date, egg prices up 60%, milk about 30%. Bacon's actually come down a bit, but how can we have a breakfast without bacon and eggs?
Yeah.
So let's start talking inflation. We see, the latest CPI numbers showing that it's cooling 6.5%. But some folks don't believe those numbers. They feel, I'm going to use the word manipulated here. Matt, I know you feel that we've hit peak inflation.
100%.
Let's start with your thoughts on where we're at.
Sure. I mean, a few months ago, I stated that the canary in the coal mine for inflation to come down was shelter, and more specifically, rents. And we have seen rents absolutely get demolished over the last couple of months. According to Apartment List, they do a lot of great numbers. Rents were down month over month in December by 0.8%. Fourth consecutive month going down, 13 straight months of year-over-year declines, and year-over-year it's only up 3.9%. People say, well, it's still up 3.9%. Well, we were up 18.1% year-over-year November 2021. So then you look at the CPI numbers, and shelter is still hitting a high. So it's that lag behind. Once these numbers work their way in, housing prices are going down, you're going to see inflation absolutely fall off a cliff, and I think we'll be close to 2% by the middle of the year.
Dan, you agree?
Mostly. I mean, look, inflation is, technically speaking, if you look at the CPI, not the year-over-year increase in CPI, it's up and to the right forever.
Right.
It never stops. And the thing here, though, is that they're different numbers. These numbers are not OER. They're not owner equivalent rent from the CPI. So that will lag, and then It'll take longer for the CPI to sort of bake it out and work it through than what you're seeing right now, but that's reasonable. What Matt says is reasonable.
I want to share a quote from Larry Summers. He just spoke at the World Economic Forum. He said, central banks not finishing what they have started and bringing inflation back to earth would be the greatest tragedy for the global economy. So I think to his point is that we shouldn't get too excited yet by the numbers, that we shouldn't be rejoicing yet, that they shouldn't let, central bankers shouldn't let their guard down just yet. I mean, what do you think the Fed's thinking next year when it comes to inflation?
Well, it depends. I mean, a couple of Fed governors come out and said basically they want it over 5, which would be over 50 basis points more.
Yeah.
The market's pricing 25 basis points on Feb 1 and 25 in the middle of March is what the market's pricing in. And I'm kind of in line with that. I think they could probably stop right now, honestly, and be fine. I think it's going to come down. Because if you model out the GDP growth month over month, if it comes in at 0.2% increase, remember last month we were down 0.1, but if it's up 0.2%, even at that rate, by May, the CPI is down to 2.6. By June, it's down to 1.4%. That's an increase, and it's not going to stay that high, which means we're going to hit 2% by the middle of the year, if not sooner. And then what happens? The Fed then suddenly stops, and then by the end of the year, they're probably lowering rates.
Dan, and just to that point, I want to share a quote from J.P. Morgan Asset Management's Bob Michel, who said, inflation isn't coming down without a recession. And we're going to talk recession in a bit, but, what's your take on that?
Predicting recessions is just a dumb thing because no one ever does it. Matt and I were talking this morning, the world's economists have predicted like 10 of the last 3 recessions or whatever. So it's kind of a dumb thing. But that is exactly like, most of the time you can fade what central bankers tell you and you can say, that's not what they're really doing. But their words and their actions have lined up absolutely perfectly. They've said, we want more restrictive policy. There will be pain. We must get the Fed funds up above CPI and all that. We're talking about 5% and everything. That's what that's all about. So if you think that they've gone restrictive enough, basically what you're doing at this moment is saying, yes, I predict that the next time they meet, they will say, this is restrictive enough or almost restrictive enough, so we're only going to raise 25 basis points or not at all or something, eventually at some point. I think they'll keep raising once or twice more, at least. But predicting this, I just...
Yeah.
Keep in mind real quick, keep in mind the Fed, they drive their car looking in the rearview mirror.
Right.
It's ridiculous what they've done. And they're trying to make a name for themselves now because they screwed up so bad. So they're coming out, and like Dan said, they're actually doing what they're saying because they just want to be strong and look strong. And I think they're going to overshoot it. I think they're going to raise them too high, honestly, and that could cause a recession.
No, they've likely, overshot. It's twice over rearview mirror. They're looking in the rearview mirror at data that has already occurred, and they're executing policy that has a lag.
Sure.
So really, go 6 months into the future, and that's what 12 months or something. You see what I'm saying?
Yeah.
It's doubly lagged. So who knows? I think they have already caused a recession, and it'll be here.
It's just interesting because as we're inching closer towards a presidential election, you cannot win an election with a recession and an imploding stock market. Now, as we know, the Fed operates independently, but how, they must be taking this narrative into account.
I think the Fed right now, their ego's pretty big. They're narcissists, and they just want to look smart. They really do. And I think they have such negativity on it that it's about them, I honestly think.
No, that is correct. You have to understand they're just humans, and they're influenced by the people around them, and they're influenced by narratives. And so before this year, the safe way to play was to be generally loose with monetary policy. That was the way to get everybody patting you on the back and saying, it's been okay like this so far, don't worry about it. And at least up to this moment as we speak in early 2023, the narrative completely flipped. And to be doing the right thing, you had to be, we're restrictive. You had to be tightening, rather than loosening. And that is, I've maintained this all along, that is exactly how Jerome Powell thinks. He is the quarterback in high school walking down the hall, and he's looking up at the picture of the quarterback from 40 years ago, Paul Volcker, and saying, I want to be like Paul.
Really?
Rather than I want to be like Ben Bernanke or somebody else who was, part of the loose monetary regime. He doesn't want to be Arthur Burns, who preceded Volcker, and he thought he had inflation licked and did not. That's what I think is probably more likely than anyone thinks at this moment. We all think, okay, well, CPI year over year is coming down. We're past the peak. We're fine. And then, the Fed reacts to that, let's say, by slowing way down and then flat maybe for a couple of meetings, or maybe they cut, in a couple of meetings. And then, whoa, we're back to, triple-digit oil or something that nobody expects,
It's going to be a vicious cycle for many, many years. I think it's going to be. Yeah,
I agree.
I think it's
completely agree.
I would bet money that they cut by the end of the year. I think there's a high probability they cut rates by the end of the year.
And then adding to this, the debt ceiling. Dan, I know in some conversations you feel it's just noise.
Yep.
Or is it? I mean, will it give them an excuse to, now we're going to have to start printing again. We need more money back into the system.
No, it's pure noise. Look, if you're can't speak from experience, but if you're a conservative politician in Washington right now, you have to pay some amount of lip service to this. But you also know that there is no way you can allow your country to default on the debt. And you print the world's reserve currency. 80% of global transactions, 60% of global foreign exchange. How bad, everybody knows this. How bad can it be if you raise it a little more? Everybody's going to breathe a sigh of relief when you raise the debt ceiling. And why they even have the dumb thing, I don't even know.
That's the other thing. Why the hell do they even have it? It's a joke.
Pure theater. It's pure theater.
And it's going to be political posturing because the far right's going to say, we're not spending, no more.
Sure.
And just because then they can run on it when they get reelected, say, I held strong for that. I mean, at the end of the day, it gets done.
Yep.
And I agree with Dan. It's 100% noise. And if that crushes the market short term, and you're looking to buy, that's an opportunity.
Right.
To me, that's not sustainable pushing the market down.
Especially if there's one last push on bonds, right? If we get one last push on bonds because of all this stupid debt ceiling noise, I think that's going to be your moment.
Well, it's I just want to bring up this historical fact. The U.S. government has raised the debt ceiling since 1917. So, if I hear you correctly, this is nothing new, but it makes a good headline. So what do we do with this information? Just
be entertained by it. Be entertained by it, but what Matt just said is true. Like if this noise causes some price action in the market, and you are convinced that that is the cause and effect relationship, like I would be really happy, frankly, to see bonds get sort of pushed down by this noise. And then, when the rhetoric starts changing in the press, I'm like, yeah, that's my moment for bonds, or maybe even sooner.
Well, to that point, and we're going to speak specific sectors in a bit, but it was raised in 2019. Gold prices nearly doubled from 1,300 to 2,100 about over the course of 17 months. Yeah. So, could this be a trigger for sectors and assets such as gold?
Well, yeah. Yeah, the same thing I just said it holds, right? If the noise presses down prices, you can look around and probably find some opportunities. And then when the rhetoric changes, basically when the noise abates, then you'll see a lift in you'll probably see another lift in gold stocks, I think, and gold. But I think you'll also see bonds go up, and those two are supposed to be opposites, but they're not really.
Yeah, whether gold goes up or down, I don't think that's going to have a huge effect on it. I mean, maybe short term, but I don't think long term raising the debt ceiling is going to make people run out and buy gold. I don't think that's a
it's not like setting off a new bull market or anything. I think it's already been set off, but
I know we touched on recession, but I'm interested to get your global view on things. I mean, we've been hearing headlines from the World Bank, from the International Monetary Fund, warning of dire times ahead for the U.S., for Europe, and especially China. What's your take from a global monetary policy? How bad is it or not?
I personally don't think it's that bad. And China in particular, I mean, they're just reopening up right now. They've basically been in self-imposed jail for almost 3 years. And you're going to see, I just looked at the Chinese travel numbers this morning. I mean, they're spiking. I mean, you have a lot of people that have been stuck, that have a lot of money. The amount of money sitting in savings accounts right now in China, through the roof. The second largest economy in the world, that money's going to go back into the economy, the global economy. So I think it's going to be great for a lot of specific sectors. You know, you think about like high-end bags and stuff. You know, the Chinese love their high-end fashion. I think you're going to see a lot of those stocks that have been beaten down do well. And I'm okay with it. I don't think we're in this huge, robust growth scenario, but I don't think it's dire, put it that way.
Okay, so I actually heard you asking about global monetary policy. So I would say that what's happening, I'm a sort of a dollar milkshake proponent, meaning that I think in the end, gold winds up being last man standing at some point 5 or 7 years in the future, and that you have to think in sort of 3D chess terms here, right? The gold is priced in dollars, and dollars, think of them as being priced in euros and yen and pounds, right? And if you see, you can get a little hint of what's to come by looking at those others. Because if you look at gold in euros and yen and pounds, man, don't you wish you made that trade? Because that's the double-digit number all 3 times, you know? So, you know, when I look at that, I think, well, you know, the same problems that affect those currencies eventually affect the dollar, eventually, right? Now the path, see, it becomes 3D chess quick though, because the path to a weaker dollar could easily contain a massive, and I think it will contain a massive rally, right? So you get this
rally in what?
In the dollar,
okay.
Right? Dollar versus euro, yen, and pound. So you get massive rally in the dollar as a kind of a fear trade maybe versus those other currencies. And then, of course, then you get a Plaza Accord moment, right? You get a Plaza Accord moment where everybody gets together and says, we have got to weaken the dollar.
Right.
If we weaken the dollar, we're all screwed. And by the way, you know, your exports are way too expensive, you know, and you'll have farmers and everybody else, you know, clamoring, please do something about the dollar at some point. So, you know, you got to think in terms of, you know, it's a really wending, crazy path once you go down these macro rabbit holes.
I would like to talk a little bit more about the dollar. We're seeing a bit of a pullback here, but some would argue that the Fed's main mandate is to keep the U.S. dollar propped up at all costs. But you bring up other nations, and we're seeing the rise of the BRICS. We're seeing other nations, you know, wanting to be part of the BRICS, and we're seeing countries who are looking for solutions outside of the U.S. dollar. We see it with Iran. We see it with Saudi Arabia. We obviously see it with Russia. I'm curious to get your thoughts. Do you feel that the U.S. dollar is threatened right now?
In the short term, absolutely not. Just because there's nobody else to step up. It's not going to be the Yuan, not going to be the Euro, it's not going to be the Yen. Like, you could look around. There has to be somebody to take the seat. Like, you could be the king, but there has to be somebody in line to take the throne, and there's nobody in line right now. Some people may argue digital assets. I don't think that's going to happen either. You know, and we're in a correction in U.S. dollar. We're down 10%.
Right.
I mean, we actually hit correction territory this week. And could it go a little bit lower? Yes, but it had such a big run. But longer term, yeah, there's deals that, okay, we're going to start paying, you know, in yuan to buy petrol,
right.
You know.
Right.
I just, and that could happen, Dan, but I don't see, it's still the king.
Yep, still
in
the
the foreseeable future.
Yep, still the king. It is, think of it this way. It's hard to sell anything on the planet Earth without buying dollars.
Yeah.
And, you know, just like the amount of dollar debt alone that needs to be serviced is like tens of trillions. A few tens of trillions around the world. That creates a demand. That's part of the milkshake. Like the milkshake is all the liquidity that was shoved out in dollars, mostly in dollars, but also actually some in euros. I found some euro milkshake spots in the world, like Ghana, you know, so it's all flooded out there, and it actually, oddly, bizarrely, ultimately creates more demand for them because you need them to service debt with them. Like, and you need them as foreign exchange. If you're Japan, they just dropped 40 yards, 40 billion, 43 billion to protect their own currency. You know, they had to buy their own currency. So
do you not think there's any correlation? We saw record buying of gold from central banks in Q3. That someone made the argument, and there was a huge mystery buyer, which we can all, presume is China, that perhaps there's plans to launch some sort of gold-backed currency down the line. Is this crazy talk for you?
Is that conspiracytheory.com? I think the gold bugs, which I'm going to get shit for saying that because even you wore your gold colored shirt today. I noticed that.
I did. It was not a subliminal message.
But no, I just don't. I don't think, again, that's reality. I think it's a great story. It's something to talk about. It's a good topic. It's a great headline. Reality is I just don't see it happening.
Yeah, it's a perennial thing. It just comes back over and over again, and a certain group of people likes to think about it. But why would you ever do this? If you're the U.S. dollar, or if you're the Fed and the U.S. government, why would you ever allow this to happen? You wouldn't.
Well, could they stop it is the question.
Okay, well, we're not going to back the U.S. dollar with gold, so they're not going to back the euro with gold. They're not going to back the yen with gold. Where is this going to come from?
You're basically creating a new currency out of thin air.
Yeah, is it going to be 0.005% of the world's foreign exchange? Ooh, it's ridiculous.
You mentioned central bank digital currencies, so let's go there for a bit. I just want to bring up some points here. So World Economic Forum just put out a new paper called Central Bank Digital Currencies, How Money Could Be Redesigned. 2022 was a record year for central bank digital currencies in terms of development. 114 countries working on one, representing 95% of global GDP. And Bank of America just came out saying that digital currencies are the future of money and payment. Matt, I think you mentioned before you don't see this happening, but do all roads lead to Rome here? It almost seems like this is the future.
I mean, I'm okay with central bank digital currencies, but it's a nice big fancy word.
Yeah.
But how is it any different than if we print money? It's still controlled the same exact way. It's just digital, and it'd be good because you can now transfer money much easier, hopefully quicker, lower costs. I'm all down with that, but the Fed can still create or take away, or the Fed can still control this, through monetary policy. So I don't see how things change. I don't understand why. If you read the blogs and everything, it's like this big fear of this digital currency.
Right.
But why? What am I missing here?
Privacy.
Because think of all the physical dollars you have in your pocket. They all have a number on them, right? Imagine if that was like trackable every minute of every day, everywhere it went.
On the blockchain.
Then we could say, and one of the fears is, then we could say, the United States is going to start doing social credit like China. And, if we decide that Matt said some stuff on Twitter that we didn't like, he's going to go to the airport. Let's say you got to run to the airport and get somewhere really fast and you don't have a ticket, and you go to the airport and then you go to buy your ticket and say, oh, I'm sorry, Mr. McCall, you can't fly.
Right.
That's what CBDC worries people about.
The control of
the
that.
Control,
okay.
right.
All
The
right.
potential
I
for social
that.
credit, yeah.
Again, I'm just not one. I'm all for spying. Like, I do some weird things, but nothing that's going to put me in jail or get me in trouble. Like, if it protects us, I've always been behind that. So,
but the point is not what you do. The point is whether or not it's not like Matt is innocent, therefore he has nothing to worry about. No, Matt is innocent today, but if Matt continues doing the exact same things he's doing, at some point in time we might decide we need to go after these people who are doing what you're doing.
Right.
What you're doing is going to now be a crime, and you can't fly, or we're going to take money out of your account, or whatever it is. And that is that's problematic for me.
So do you see it as a reality, Dan?
I don't have a sense of it. I don't have a sense of like how far along
Right.
this is. I don't have a sense of how realistic it is. It feels very unreal because of the Orwellian
Right.
scenario that I just described. I want to say, no, this is not likely, but I honestly don't know how likely it is.
but won't that
Nobody knows the probability.
If that does
I
get
don't
closer
think.
to happening, Dan and Danny, wouldn't that even be a bigger proponent for cryptocurrencies, because I think then
Well,
people are going to be like, hey,
that was my
listen,
next
no,
point.
you know,
That was my next
that would be
point.
great for Bitcoin. I mean,
Let's play it out. Let's play it out. Let's say it is coming, right, to a theater near you faster than you know it. How can we prepare? What should we be owning?
I'd have to say Bitcoin. I mean, 100%.
Right. Bitcoin fixes this.
Yeah.
Right. That's this phrase that is often used, and it seems that it does, kind of. But you know, there are you know bills in like every legislature all over the place about regulating how Bitcoin is used and everything else about it. So I'm like,
Right.
well, if they can even be talking about that, how does Bitcoin solve anything? I don't understand.
And I think that's a perfect segue. So let's drill down into certain sectors now. Let's start with crypto. I know Matt's take here, but given the crypto carnage we've seen now, Genesis just declaring bankruptcy. The sector has obviously taken multiple blows, and I understand Bitcoin's in a lane of itself, right?
Mm-hmm.
But just your thoughts on where we go from here. I mean, Matt, you've been uber bullish Bitcoin. Has anything changed for you
No,
since the FTX blow up?
No, I still remain bullish long term on Bitcoin, and I think we go back to highs. 69,000, whatever it was, it's 21.5 now, somewhere around there, and we're well off the lows. And you're seeing correlation, which I don't like to see, but you're seeing correlation of Bitcoin with risky assets, with risky equities, and that's why we've seen that really kind of move this year so far. And I think that continues because I'm bullish on some of the riskier assets in the next couple of years. So I am bullish on Bitcoin. I think the kind of the tipping point this year is going to be a little bit of regulation, and I think it's going to be good for it because you talk to these gentlemen and women that manage large amounts of money. Right. They need more regulation to be comfortable with their clients.
Right.
So, and once we get that, I mean, and keep in mind the penetration still is very low. We have the halving coming up again next year, I believe. That's going to cut the mining in half. That's going to be great for it. Historically, it rallies into that. So I think we have a good next 12 to 18 months.
How badly does the sector need a spot ETF? Does it?
I mean, that'd be great for it because you're going to see the demand obviously pick up and supply demand. The fact that the SEC can't get out of their own way and approve it is just insane. They approve a futures one, which is 10 times riskier than a spot. So I just, after what just happened in the last few months, I don't think the SEC is in any hurry to approve a spot ETF, honestly.
I think a lot of investors, Dan and Matt, are looking at Bitcoin now thinking, what do I do? Is this, have we seen the lows? Could we go lower? Should I wait? Some are thinking, whatever I have, should I just take it and check out now? I mean, what is one to do with Bitcoin?
I know why I sold it and what I'm waiting for, which is Matt touched on it.
Wait, you sold at the top?
No, I didn't sell at the top. I think we bought around 10,000 and sold around 30.
Okay.
After watching 69 go by, whoa. And I thought, well, that's not how a currency or a store of value behaves. I'm getting this wrong, and it's correlating with risky assets, so I'm doing something wrong here. And I heard people like even in 2021, 2022 saying, this is the year that it doesn't correlate anymore with the risky assets. So far, we haven't seen that. But I'll tell you what, if we ever do and it ever starts behaving right, you will want to own it. Yeah. And I think I can wait. And it wouldn't surprise me. I'm less bullish in the near term than Matt. It wouldn't surprise me. I mean, just looking at charts and things, like there's like a free fall between about 12,000 and 3,000. So if we ever get down there, whoa, look out below. But if we ever get down there, Dan is going to be shoveling Bitcoin into his. I mean, I'm going to be shoveling money into Bitcoin somewhere down there, and I would be, I'd be happy to own it down there.
Is there anything else you'd be buying in the crypto space?
I mean, I like Ethereem. I think, 1 and 2, with a lot of stuff being built on Ethereem. So I'd look to that. I was into altcoins very big a couple years ago and did very well in it. And at this point, the risk versus reward's not there for me right now. If I start to see the entire market turn around, I might, take a look again at some altcoins. But I just don't think it's out there because there could be one more leg down. And if there is, these altcoins fall 80, 90% from already 80 or 90% down. And that's just too risky for me at this point.
Yeah, they're the peapodgrocer.coms of and pick your favorite .com that no longer exists, and that didn't exist after like 2001. And that's what they are. They've all been obliterated, and most of them are not coming back.
Before we talk more sectors you like or dislike, just in 2022 and during this whole inflation time, do you feel that those thesis or theories of Bitcoin is going to be the ultimate inflation hedge? No, gold is the ultimate inflation hedge. No, should this just be all thrown out the window because?
Well, inflation's going down. It doesn't matter. It's a little late now. I mean, he should have been doing that. And, my argument against gold is you go back to, March of 2020 when inflation was 0.1%. And from that time to now, gold's up like single digits. If you couldn't paint a better picture other than the dollar going up, you could say that was against it. But how the hell did people, I just don't understand how people love gold when it didn't even do what it's supposed to do, hedge against inflation.
Well, there's the counter argument that compared to other assets in 2022, it, held its own.
Yeah,
and so could, Dan?
It's flat since the peak of the NASDAQ.
Yeah.
And NASDAQ isn't flat since then. Yeah. And so it did exactly what it's done for 5,000 years. It held its value. You could say more or less. The price trades every day.
Right.
It trades in dollars. So, of course, it's not going to, be the same price every single day. But overall, if all you did was own gold and cash for the past year or
right.
so, you would look like the smartest guy
right.
in the room.
Right.
But the point about gold, all this talk about it, most of the talk about it, and I read some questions apparently that we're going to answer later on. The problem here is this either or, this sort of binary thinking. And I've continued to say you need to hold plenty of cash, you also need to hold gold. Those are not contradictory statements. You need to, and in fact, in my view, cash is the true diversifier and gold is also...
Physical gold.
Physical gold is also a true diversifier. So I don't see any of this as an either-or proposition in there, and maybe you want some Bitcoin in there too.
Well, that's because you actually have a brain. Most of these people who own gold they just can't think outside the box, and they hate the dollar because they hate it's being manipulated. So I'm going to own gold.
Right.
So you wouldn't be a buyer of gold here, Matt, despite all the fervor and excitement surrounding the metal right now.
No, and just to be clear, I think it was 05, 06 when I managed money. Gold was my largest holding for clients for about 3 years. We made about 190% on gold, and GLD we owned.
Yeah.
And so I'm open to it at the right time. Up around 1900, is that where it's around right now? Mm-hmm. I think it could run to 2000, 2100.
Okay.
I do the charts, I see that. But that's 10% on the upside. I think there's at least 10% on the downside. So a one-to-one investment is not something that excites me. The dollar has come down, it's sitting on support, and the US dollar turns around for any reason and rallies, gold's not going to make it through that 2000. And so that scares me.
That's Matt and I actually don't differ on as many things as people think, but we do differ on that. I think it is easily possible to be simultaneously bullish on dollars and gold. I think you could easily see both of them rising together, more or less,
Yep. And others would make that argument in case as well, Dan. And so what about, just quick thoughts on silver? Do you like silver?
It's a different animal, but I do like it because what you see, if you look at a really long-term chart, it's sort of this sort of sideways almost, and then you get these huge spikes. So if you catch it right and sell into one of those spikes, you're doing a multi-bagger return usually within a couple of years. So it's cool.
Want to talk equities right now? Some would say you take out Tesla, take out Amazon. Things are looking pretty good now. I believe you're bullish.
I feel like we had to take out.
Right. So the tech sector just basically getting destroyed. Layoffs left and right. Google announcing layoffs today. Matt, your take. What is one to do with the S&P here?
I'm bullish on it, and I never answer where it's going to end at the end of the year because I don't know where the hell it's going to be on December 31st. Mm-hmm. I think at some point from the beginning of this year, it will be up at least 20% at some point. And I think it's probably going to be later in the year because I think the Fed will pause. Inflation is going to come down dramatically. We're going to digest a bit of an earnings recession probably these first 2 quarters and get that through, and then we should see a rally at that point. Keep in mind, last week, the total net assets in money market funds came in at $4.81 trillion, the highest ever, above March 2020, which was the COVID situation. And typically when you see that money has to go back to work. That includes retail and institutions. And if an institution sitting on money, yeah, good. They look fine for a while to protect themselves, but eventually they're paying you to invest that money.
Yeah.
And they got to put that to work. So, and we've seen a lot of that go to work, I think, in the first couple of weeks of January. We saw some money coming in. And, what's the alternative? The interest rate, average interest rate for a savings account right now is 0.24%. I mean, that's ridiculous. 1-year CD rate, 0.9%. You could say, oh, I'm going to invest in a 10-year treasury at 3.4. Sure, but you're going to lock in at 3.4 for 10 years. You're going to underperform. So the alternatives out there right now, and I think bonds could be I agree with you, bonds could be a good investment opportunity, but that money is going to eventually flow into equities and the S&P and globally, in my opinion.
Can you give me specific sectors you like?
Yeah, why don't you talk about equities first, and I'll come back and do sectors.
I don't think, I won't talk about, I won't say I know the path from here to where I think the market's headed, but I think the destination is ultimately lower. It could easily involve a blistering rally in the interim, but I think the destination is ultimately lower because I think we have just been through and are still at the tail end of the absolute biggest financial mega bubble in all recorded history. And you can see it, like it sticks out from every chart. It's really not hard to see at all. Like bonds were insane in 2020. In March of 2020, the 10-year traded briefly at a yield below 40 basis points. A yield. People paid money to buy bonds that yielded less. For 10 years, you're going to make 0.398% a year.
Sucker.
It's just insane. And then later that year, there was like a peak of 18 trillion of negative yielding, mostly sovereign Japanese and European debt in the world. Like 2020 was the big mother bond market top from the big bottom in 1981. So I think that trend is over. Then you go to even in 2021, also all of the 2021 is really when the market started falling apart. That's when all the garbage peaked. The ARC and the clean energy and all of that, and the SPACs and all of the garbage, and then you get NASDAQ, Bitcoin, Russell 2000 peaking in November, then Dow and S&P 500 January 2022. So we've seen this massive, massive top. I don't think we get out of this. We've never gotten out of anything like this with so little pain. So I think ultimately the stock market goes lower.
Two really different points of view here. I like it.
I'm not disagreeing that some stocks are done, but I think innovation doesn't rest or take a nap. I don't care what the economy is doing. There's still people innovating. There's a lot of entrepreneurs out there creating new things, whether it be in the genomics and healthcare, whether it be in energy storage, it could be clean energy. There's a lot of innovation that's still going on, and that's not stopping. So those stocks did get hit because a lot of them aren't yet profitable. They're borrowing money. They're in the growth stage. But eventually they move on, they mature to the next level. And these aren't, the winners of the next 10 years won't be the Amazon, the Googles of the world. They're going to be the next iteration of them. And names we may not even know about right now. So, I look at energy, and I think Dan and I probably agree on this. Part of it is, I'd take the barbell approach. We have some clean energy stocks in the portfolio that I think will do well over the next 5 to 10 years. But we also added recently some dirty energy, some oil and gas, because we're doing a study right now on my team to take how much dirty energy does it take to basically build a solar panel or build a wind turbine. It's absolutely amazing how much goes into it. We don't have the exact numbers yet. But, as much as we're behind on clean energy, the numbers are just amazing. Like you look at this and it's like offshore wind is big right now. They're passed a lot here in the States. It's big other places. Could increase 3.5x in the next 6 years. There's just so many, even if these numbers come in half, Dan, there's still great growth opportunities.
Right. So the problem I have with all this is we need to sort of talk about the strategy that you would really need to make money off of innovation. You're basically talking about buying 200 stocks and 50 or 100 of them go to zero, right? In other words, you better be Matt McCall and pick the right ones. But innovation is a terrible investment. It's always been a terrible investment because the innovator's dilemma, right? The innovator is not the one who makes tons of money off of things. That was a theme, that was a narrative and a theme in the recent bull market. But overall, over the long term,
When you say the innovator doesn't make money, who are you referring to? The actual person who created the company? You're saying the investors in the innovation?
Yeah.
Both.
The investors in innovation.
Sorry, Dan.
If you focus on, I'm saying, if all you do is focus on innovation and look for companies that are making new products, most new businesses fail.
But what I think we're looking at innovation from two different lenses.
Yeah.
I think you're referring to innovation as a startup in a garage trying to create the next quantum computer, let's say. That's completely different than a company like, let's say, Borg Warner, who's innovating their entire business model to now outfit electric vehicles. It's an auto parts maker versus traditional.
You're right.
So I'm looking at that too.
And I promise we're going to get to the viewer questions, but I love this conversation. 2 points I want to make here. One, Matt, regarding green energy, could you not make the case for a commodity super cycle then?
100%. That's in my notes here. I mean, there are like certain ones like rare earth minerals.
Yeah.
Love them.
Yeah.
I mean, rare earth minerals, they are needed for so many things. Fuel cells, even traction motors, robotics, drones, semiconductors. Look at copper.
Right.
Like think of copper being, not technology innovation. It's needed for batteries, wind turbines, PVs for solar. Like it's needed for everything.
I see Dan smirking there, and I know you've been doing a lot of research on this, and I just want to bring up something you've said. You've said we've spent $4 trillion on green energy, $4 trillion
four-ish,
in the last 10 years, and fossil fuels have gone down from 82 to 81% of global share. This is according to Goldman, I believe. So. Yeah, he's shrugging his shoulders.
So look, if I just want to own good businesses, and if there's a good business, actually, I have a renewable energy royalty company in the Extreme Value newsletter. So let's just get that in there. But yeah, the world runs on fossil fuels, right? And this is sort of an interesting moment because I want to be a contrarian when I buy a commodity, and I don't feel like a contrarian with copper or oil or any of these things.
True.
But especially with oil, the world is made out of four things. The world is made out of four things: ammonia, plastics, cement, and steel. Ammonia, plastics, cement, and steel. So what's the common thread there? Fossil fuels. It's all fossil fuels. Steel physically has carbon in it, like it's an alloy of iron and carbon. So you can't run this world. You can't have modern civilization. You can have modern civilization without silicon wafers and transistors and even personal computers. Those things weren't invented until the middle of the 20th century. They didn't really come into widespread use until beginning of the middle of the 20th century. So we were a modern world by then. And so that makes me bullish on fossil fuels, right? It really does. So, and the point about copper is not a bad one either. Rare earths is the one I smirk at because, the narrative is that the supply is somehow constrained, and it absolutely is not.
It's the refining. Where's all the refining happen? Over 90%
capacity.
of refining happens in China.
Sure.
So we're relying on them.
Right.
But the government has given some money to a company that we have in our portfolio to build one in Texas, a refining plant.
Yep.
And we're going to get there because we're onshoring more things, as many other countries are. And I agree with you, Dan. It's not as rare as it sounds in the name, but it's just you can't just turn that mine on. It's going to take a while to get that out.
True enough. The resources are all there. There's no shortage of that. But true enough, you can't start up a mine in a weekend.
Just quickly, are any of you bullish uranium?
I love uranium. I think nuclear power is a must. And if I don't believe in these goals of net zero by 2050 and stuff, there is no way you get even close to those goals without increasing nuclear power. It is absolutely impossible.
No, there's no replacement for the four pillars of modern civilization, and there's no replacement really for fossil fuels.
I want to, just sticking to specific opportunities, going to go to the mailbag now. We got tons of questions from viewers. Thank you for sending them in. I'll try and get through most. Okay. What do you guys think of petroleum royalty trusts? Any thoughts on petroleum royalty trusts? Pretty specific here.
Yeah, I think it's company specific for me.
It is. It's like stock specific.
Okay.
Not against
done
it,
that.
but I'd have to look at the
I mean,
individual
and
company.
actually, there is one that I think is really great, but I can't mention it because I'm putting it in my newsletter.
You'll have to get the newsletter.
It's just coming up, so it'll be an extreme value.
Okay,
soon.
here's one on quantum computing. I love these very specific questions. Okay, given that quantum computing is several million times faster than any supercomputer today, and given the artificial intelligence can draw on big data worldwide, what is the best way to position our portfolios to benefit from the inevitable huge breakthroughs?
This is like saying, I heard that the Bugatti Veyron is the fastest production car in the world. How do I position my portfolio?
Yeah.
Well,
Well, I will say this. Quantum computing is a thing. It is going to be huge in the next 10 years. It's going to take a while. IBM is a major player in it. That's one way if you want to look at like a big blue, small portion of the business, so you're not really going to get much from it. I'm not a fan of IBM, but I'm just saying there is exposure. And there's a couple small public trade companies I don't want to mention that are in quantum computing as well, but a little too small and a little too risky at this point.
The folks want to know if you like BRK, Berkshire Hathaway.
No.
no, why not?
Just flat, no.
I'm not a Warren Buffett fan. I think he's been able to get deals, how about 08, 09 or 08 when he got that sweet deal with Goldman Sachs and got, the big dividend bought at a discount. Shit, if I had that too, I'd be a billionaire. Come on, I'm not putting him down what he's achieved over the years. He's just past his time. And unfortunately, they're both in their late 90s, him and Munger. So you're now going to be betting on whoever takes over, not even them anymore.
So they've essentially, if you think about it, they've kind of built an endowment. It's sort of an endowment kind of a portfolio. The biggest piece is insurance, which is a phenomenal business, and they own phenomenal insurance companies, some of the best in the world. And another huge piece is the utility company, right? This is a guaranteed return, and they put massive amounts of capital into it. And so it'll continue giving this sort of, that part of the business I think will continue giving its low sort of guaranteed double-digit-ish return for a very long time. And on top of that, you get, this massive amount of cash protecting everything and sitting around waiting for the next big
They're sitting
opportunity.
on a large amount right now.
Right. Large amount minus the $30 billion they keep around just in case a big catastrophe event affects that business and they have to pay it out. So, but I do like it. I don't think you should expect a great return from it.
Here's a question I like since I'm a mom of young kids. Hey, Dan, Danny, and Matt. My question is, what is the best saving strategy I can start for my son? He's 8.
You should have started 7 years ago. No, but honestly, I would put whatever you can put away from your paycheck every 2 weeks into an account, put into the S&P 500, dollar cost average, because there's no 20-year period where it's been down, and I believe in America, just like the Warren Buffett believes in America. And by the time the kid's older and he needs the money to buy a first home at 30 years old, he's going to have a nice chunk of change.
Yeah, I mean, the most important thing, no matter what you do with it, people don't realize the most important thing there is to build the saving muscle, to build the habit of saving.
Yep.
In fact, I would say this, saving money regularly out of your paycheck or whatever is the single most important skill every investor must have.
That's right.
If you don't build that, you miss a lot. You miss just the whole idea that you need to accumulate capital in excess of everything you spend, right? You got to spend less than you make and use the rest to accumulate capital. If you don't do that, which a lot of people don't in our country, that's why
Most people are upside down.
Yeah, most
They're
people are
spending more
upside
than
down.
they actually make.
Exactly. So you've got to do that. And at the age of 8, get him somehow to do it. Give him an allowance and make him put
Get him interested in it.
Because
teach him what he's buying, whether it's a Disney stock or something.
Yep.
Teach them what they're doing. I
Right.
think it's important.
How do you make saving interesting? Because people say, well, it's boring. It's much more fun to go spend my money.
It's
right?
not
It's
boring
a
at the
valuable-
end of the year when you have twice as
Absolutely.
much money. That's a
Right.
pretty nice
Yeah.
way to look
That's
at
right.
things.
So on the other end of the spectrum, we have a question from a 73-year-old woman with Social Security and few retirement pensions. Do you think these will be affected in the coming financial storm?
Social Security and retirement pensions. Well, we don't really know what's in the pensions. I mean, this is a thorny question because we really can't give individual investment advice.
Right.
But we can generalize about retirees. certainly.
Yes.
Sure.
People on fixed incomes with, a set amount of assets that might have taken a hit over the last year. And the problem with it is that it's investor specific. Like, I don't know her. I don't know what her condition is, her financial condition. I don't know what her goals are. I don't know what
she
she's
might be
trying
asking,
to do.
like, is Social Security still going to be around? I feel like the coming storm, she's looking at it that way. Where 73, in your lifetime, I think Social Security is going to be fine. I don't know if it's going to be here 70 years from now, but I mean, I'd like to see her live to 143, but it's probably not possible.
Here's a good one, and I'm just going to add a spin to it. What's king today in the next 4 to 5 months? Holding cash or stocks? I think the question is how much cash, allocation of cash right now. How key is that?
4 to 5 months.
This is a 4 to 5 months, but let's
Who the
say
hell knows? That's a tough.
let's give
so
a broader horizon here. Let's do.
Matt's already onto this.
Yeah.
There's two problems with this. One is you're binary about cash and stocks. Like, maybe you are right about the interpretation of this, and they're saying how much percent in cash, how much percent in stocks. It's investor specific. It's up to him.
Yeah.
I think people should have what I would call plenty of cash, which is like 20% of your liquid assets or more. But the other thing with this is just the 4 to 5 months. I mean, 4 to 5 months.
I feel like it's somebody who's like buying a house in 4 or 5 months. And what can they do with it?
Yeah, it's just my father. May he rest in eternal peace. What a wonderful man. But he would call me up and say, how can I make $5,000 really quick? And I'm like, I'm like, you practically just lost it.
McCall.
You practically, you probably lost money just talking to me about that idea because it's such a horrendously bad idea.
Just to try and answer, I don't ever invest for 4 to 5 months, and I have no idea in that short-term time frame.
Yeah.
I will say, though, sitting on a nice chunk of cash right now, I think will pay off in the next 4 or 5 months, because I believe there's going to be a lot of good opportunities in the next 4 or 5 months, if that answers it.
Good answer.
I think I'm going to end with this question, or wrap with this question, because, well, the question is, where do you put money during a war? But I think the bigger question, and I'm putting my own spin on it, sorry folks, is how do you prepare for black swan events? I mean, we weren't prepared for the Ukraine war. It obviously threw us a curveball. So, what should we be doing ahead of the next black swan? Because there will be another one.
I always love this question because the whole point of black swan is you don't know when the hell it's coming and what it's going to be.
So how do you prepare?
By definition, you don't know.
Yeah.
By definition, it's unpredictable. So that's what I've been saying for the past couple of years. Prepare, don't predict. And what do you prepare for? And the answer to that is yes. Because that's why I say yes, you want gold and you want plenty of cash, and you can't afford not to be invested in really great businesses that can grow over a long period of time. All of the above. You can't afford not to have all of the above.
So bringing it home here, right, as we're wrapping, just, final thoughts. I want to know news headlines you are paying attention to, things you are watching, anything on your radar that's making you guys go, yep.
Well, I'll tell you. When I look at 2023, let's look back at headlines of 2022. It was inflation, it was a Fed, the war, probably throws in ties in interest rates and everything else. Mm-hmm. And let's look at where I believe they're going now. I believe inflation has peaked, and I think it's going to come way down. I think the Fed is going to probably pause after the March meeting. I think the war, that's an unknown, but we become a bit numb to it as far as investors. It's not affecting a lot of decisions in the stock market. So a lot of the three drivers that drove the market down that spooked people last year, I think we either subside or completely disappear. And I think that's going to set up again for a second half rally coming in. Take into consideration, again, money market's at the highest level ever right now, so there's a ton of cash on the sidelines. Dan and I have been in this business for a long time, and this has been a weird year for us, our business, and everything else because it's, people are. It's not that they're negative. They're like, okay, let me short stocks, or they're not missing. They're not the fear of missing out, greed, obviously. They're literally deer in headlights. They don't know what the hell's going on. And I think that will change. I think this is a short-term situation, and this will change once some of these factors are pushed aside. There's always going to be another thing to worry about, but once these are pushed aside, you're going to see money start coming in, and then buying begets buying, and I think we have a nice rally at the end of the year.
Good synopsis, Dan.
So I'm going to head back to the war black swan issue, and actually take a crack at it. So the black swans, some kind of a credit event. Right, some kind of a credit event, probably like the typical thing that you see in commercial real estate.
Yeah.
Boy, looming disaster, right? Like you'll see like a 50% occupied building that needs to roll over a loan, and it's 50% occupied, they're not making their payments, something has to give, and there's a lot of those out there. There's a lot of fraud that I think is yet to be sort of washed out, and it will be washed out in like private equity and probably like, I don't know, if this news about Tesla and the video being faked, if that could blow up into something bigger, I don't know. Certainly, like the Tesla bears have been waiting for the big fraud moment for years, and there's a lot of potential there. Just because the CEO keeps making promises he can't deliver, maybe that's one. And I think the stock is tremendously overvalued, so I think it will go much lower. Just on competition.
We have to disagree at some point.
Yeah.
I think it's tremendously undervalued.
Yes.
Tesla down around $100
Yeah.
that's a gift that's just going to keep on giving, in my opinion, down
It's
the road.
a huge buy for here.
A huge
right?
buy down here. I'm not saying it can't go to 80 before it goes back up to 200, but I think in this 100 area is a sweet spot for me.
Yep. If I would be shocked if it doesn't wind up below 50 at least, but. Just on normal market dynamics, just on competition, not fraud or anything. But so commercial real estate, fraud coming up in all kinds of places that nobody ever predicts. Everybody gets caught up in fraud, and sovereign, monetary problems, right? Like global currency issues, stuff like. I mean, we've already seen them. That's already started happening, when the Bank of England has to intervene to save pensions, and the Bank of Japan is still, like, as we speak here, they're still at it, So that's going to keep happening, and I don't know where all that ends. I don't know. I mean, I think I do. We know throughout history where it ends, right? There's always this epic struggle between the bond market and the banks on one side and the currency on the other. And we all know which one goes down in the end, and it's the currency, always. So I fear those things, and if you're looking for black swans and things to kind of think about and prepare for, those are a few of them.
Dan, Matt, on that note, thank you both. Thank you for all these incredible insights. I think you've equipped us with some really good talking points here we can take home with us. Thank you for joining me here.
Thanks for joining us. Yeah.
And we hope you enjoyed the special roundtable. We'll have much more coming your way, so be sure to stay tuned to Stansberry Research.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.